Hello and welcome back once again for another video. So today we're gonna talk a little bit about Robinhood, the well-known stockbroker that has taken the world by surprise, I guess. And previously it used to be that people would, for the most part, pay some money for making some of their trades, and brokers tended to charge like $2 or $3 per trade or so, and some of them, like interactive brokers, I remember, were like $1 per some specific volume of shares, more destined towards day traders. But Robinhood basically was one of the first brokers that tried to make the whole process completely free for investors and gain money out of order flow and other things, but basically make it so that investors would trade for free. And pretty obviously, investors loved that. And Robinhood basically caused a little bit of a storm. And most companies right now, most brokers, tend to allow people to trade for free just because of Robinhood. So basically, regardless of what you think about the Robinhood broker as a business, it definitely helped us investors at least not waste extra money when we are trading or buying or selling stock just for long-term holding, basically. So thank you for that, Robinhood. But in this video, we're taking a look on whether it's actually a good idea to own the stock of the company, because we obviously want to be making money in the long term, in the long run, or even in the short run, if possible, at least for some of you guys. But we definitely want to examine the stock and see whether it actually makes sense right now to potentially buy it. And I wanted to start off just by taking a look at the chart. And this is basically all the sales history and basically the price history that we have for the stock, because it's a very, very new IPO. It basically went public, I think it was like June or so, July over here is when Robinhood went public. And it got a little bit of an increase in the first few days, but then healthily declined for months basically. And right now it's hovering at around $19 and maybe potentially heading for even lower, it looks like. But will this pattern continue to happen, or it will revert? It's beneficial for us to at least take a look at the financials of the company to see whether it makes any sense to hold the company at least for a little while, waiting for it to gain some momentum and increase the price of the stock. Now, before I start analyzing the stock, I want to say that these kinds of stocks, where they are like very trendy and a lot of people trade them, and basically they're a trendy business pretty much, like as Robinhood is, you would very well see it all of a sudden reach like $100 for no real reason, even if the company basically does the same thing that it does today. It wouldn't surprise me at all to see this company like boom all of a sudden and reach 100 and then maybe go back down again to 50 or something. Happens a lot with many stocks, and it doesn't have to do with financials, but it has to do a lot with sentiment and what people feel about the company and how people actually react when hearing different news about the company. And basically buying and selling especially for traders, has a lot to do with market sentiment. So bear that in mind. I mean, we are examining the stock here in terms of financials. We're examining the company basically, not even the stock. And regardless of that, yeah, bear in mind that any stock price movement could happen for various reasons. Even Reddit could potentially cause a mass influx of buyers coming in. So yeah, let's move on and take a little bit of a look. As you saw here, yeah, the stock price has basically fallen off a cliff over here, as you can see. It's been going down and down and down, but this may signal actually a buying opportunity. So let's actually take a look at the financials of the company, starting as usual with the income statement of the company. It's basically what we, for the most part, tend to examine first. And bear in mind that this company basically went public this year, so we don't have a lot of data. So I have to go to the quarterly, basically the quarterly income statements here, because there's no yearly. It's just less than a year so far. So we can take a look at the income statement here and see that This company seems to be growing the income. If you exclude the latest quarter, really, the third quarter of 2021, which is significant because we definitely want to see an increase quarter over quarter, but it can happen. I wouldn't be terribly afraid or terribly scared of that. And you can see the year-over-year growth over here that's actually shrinking, which is potentially signaling the entrance of competition, or maybe the fact that Robinhood is not as trendy as it used to be, potentially. So yeah, year-over-year growth seems to be shrinking, and this is definitely not a good sign. But we want to examine over here, let me find it, the net income over here. You will see that as the quarters pass, the company seems to be spending more and more money, actually losing more and more money instead of actually making money. So the net income is in the negative over here, and that's definitely not a good sign. It seems like the company is not making money out of operations. So let's take a look at the balance sheet next. And you will see here that the assets of the company, and I'm just going to go directly to the total assets of the company, they seem to be increasing basically here. So from 15 billion to 19 billion, and this is like a difference of 2 quarters. So this is interesting to see, and it may signal the potential opportunity of buying the stock, just because you are seeing that the company seems to be adding up in terms of its balance, adding up assets to its balance. But we want to examine because these kinds of assets could be anything, and we want to examine, could be loans even. So we want to examine what kind of cash flow the company has in order to have this type of assets, to see whether it's actually sustainable or it's just a cash injection, for instance. That's important. And you will see here that the total equity again seems to be growing if you exclude the liabilities. So this is a normal picture over here, but you will see that in the third quarter of 2021 there was a steep increase in terms of the total equity. And if you take a little bit of a closer look, you will see the additional paid-in capital. So additional paid-in capital in the common equity section means that this was money that was basically extracted from investors. So the company sold stock to investors and got some money, 10 billion in this situation, from investors. And you will notice that retained earnings are in the negative, and that's also a bad sign, because it seems like the company cannot save money, and it seems that they are in the negative quarter over quarter. So that's not great to see. But let's take a look at the cash flow, which is probably the best picture that we can get for a company. And you will see the cash flow from operations here, from operating activities basically. And this goes back to a few quarters. But you will see here that apart from the second quarter of 2021, in which for some reason they made a significant positive operating cash flow, in the third quarter, the cash flow was negative 1 billion. The previous 2 quarters before it was negative 2 billion. So the company is losing money, basically. It's not making money from operations, and I hate to see that. And investing is basically very minor here. You will see there was a little bit of an uptick over here with 150 million. But overall, this kind of investing is basically nothing, like a few million, which is nothing for these kinds of companies. And cash flow from financing is interesting because you'll see that's in the positive, which is generally speaking not a good sign, because it means that the company is incurring debt. And you will see here that indeed there was an issuance of common stock. So the company issued stock and got money out of that stock, basically, out of selling that stock. And you'll see that in the previous quarter that there was a long-term debt issued as well. So these kinds of negative values are not good to see for a financial statement, basically, in the cash flow. And the most important thing over here, obviously the net change in cash is something that you can see, but the most important thing by far is the free cash flow. And I'm a bit surprised that they have any supplemental items, because that's actually extremely important. Free cash flow, you'll see that it's again kind of here and there, but like everywhere. Like you cannot really tell what's going to happen next quarter, really. Like this is very weird over here, like 2 billion of a gain for a gain here, and then 1 billion loss. So weird. I hate to see that with companies. I like stability. It's the company needs to be growing a little bit or just be hovering at around the same level. But like going 2 billion up and then 1 billion down, that's not good. That's not great. And let's take a look at multiples here. And I kind of wanted to examine, actually, I wanted to examine the solvency here. Just take a look at the total debt. And you'll see that the company started with 87% total debt to equity, which is significant. I mean, that's quite some debt. Not an insane amount, but it's kind of significant. But now, in the first quarter of 2021, it grew to 1,000%, like 10 times the amount of equity, which is insane. And then 4,000%. That's insane. And then for some reason, it went down to 44. Probably they repaid some debt back. But this is like this kind of financials here are very, very weird to me. The fact that they seem to have repaid some debt is a good sign. So this may actually help the company grow a little bit and increase the stock price. I wouldn't be surprised to see that. But all in all, if I think for myself whether I would buy this company, I wouldn't buy this company for long-term holding, but I think it's this kind of company is a great potential target for day trades. So I think, or even swing trades. I think holding the stock for a few days or maybe a couple of months or so, or even a month, could be beneficial to some, especially right now when the company is actually going down. So if the market reverts a little bit and it starts growing higher and higher, maybe you can see the stock gaining a lot very quickly. But in terms of holding the stock for long-term investing, I wouldn't do that. I see that there is potentially quite a lot of competition with a company like Robinhood. And yeah, they do have a brand name which is known to many, and I think they will keep having that name. But I think there's a lot of risk with this kind of company right now, as I see its financials. Maybe they can turn it around, but and it's still a little bit too early. I mean, they just went public, but the numbers are all over the place that I'm seeing on their financials, and I'm not a big fan of that for long-term investing. Again, I mentioned long-term investing because that's important to realize it's not the same thing as a short-term trade. We're talking about long-term investing here in terms of stock picks. So yeah, I would probably sell the stock if I had it. And again, I would potentially trade it, and even on the long side, if I were to trade it and just hold it for a few days. That's my reaction to the financials that I'm seeing over here for Robinhood. So thanks for watching, and if you enjoyed the video, remember to like the video and subscribe, because there's gonna be a lot more to come. And in case you enjoyed, and you do enjoy these kinds of videos, you may want to take a look at this video where I'm talking about Cathay Woods and her ARKK ETFs fund, just to get an idea of whether it's a good idea to potentially invest in this fund or not. So this has a lot of attention right now, so it's interesting for sure. Thanks for watching, and I'll see you in the next one. Bye bye.